years ago, an independent professional investment organization was set up to invest the Canada Pension Plan on behalf of the millions of working and retired Canadians. It had a very clear goal, which is to earn the best possible investment returns. And today, CPP Investments invests across public equities, private equities, bonds, private debts, real estate, infrastructure, and many other areas, all in order to build a resilient, globally diversified portfolio and to grow the CPP Fund to help ensure the financial security of millions of Canadians now and for generations to come.
Hello. A warm welcome to everyone in Nunavut, Yukon, and the Northwest Territories joining us today. Thank you for making the time to be with us at our public meeting. My name is Heather Monroe Bloom, and I have the pleasure of serving as Chair of CPP Investments, the Canada Pension Plan Investment Board. Every 2 years, we hold public meetings with Canadians. It's our commitment to update you on how we are investing the CPP Fund to help ensure it will be there for many years to come, and to provide you with an opportunity to ask questions directly to our leadership. CPP is an important foundation for Canadians in retirement. Understanding the fund's performance and sustainability will provide information and reassurance regarding how it fits into planning for your future. This year, against the backdrop of the global pandemic, we're holding these meetings virtually. We believe this is the safest way to provide you with a full report on our work, while at the same time giving you an opportunity to ask questions. In developing today's program, we talked with numerous Canadians in advance. We wanted to determine what questions you might like us to address. Over the next 20 minutes, we will touch on many of these topics, including our approach to sustainable investing and how we design a resilient CPP fund for the long term. We will also share our most recent financial performance, and you will hear from our CEO, his perspective on the current global economic situation. Finally, we have 35 minutes set aside to answer your questions. You may submit your questions at any time during the presentation, and we will do our utmost to respond during the question period, and if not, we'll follow up with you after the broadcast. 10 years ago, I joined the board of CPP Investments, and I was honored to become chairperson in 2014. Over these years, our steadfast goal has been to provide the highest standard of governance and oversight at CPP Investments. Let me begin by saying a few words about how we do this on your behalf. In a challenging and rapidly changing environment, sound governance plays a critical role in ensuring that CPP Investments continues to meet its obligations to each of you, the 20 million Canadians who contribute to the CPP Fund, and those that rely on it as part of their financial security in retirement. CPP Investments operates at arm's length from federal and provincial governments and is guided by the independent, highly qualified professional board of directors, which I am privileged to chair. Our governance structure is designed to support a clear goal to invest the funds that come in from contributors, maximizing returns without incurring excessive risk. In addition, the assets in the CPP Fund are strictly segregated from all government funds and are thus protected from any political interference. Our board is comprised of experienced individuals with the skill sets and expertise needed to provide effective oversight of this global investment organization. The board is also diverse, with a wide range of relevant professional backgrounds and global experience. We are each committed to serving the key public purpose of the fund. We are strong believers in the value of transparency and open dialogue, and mindful of the important role entrusted to us to help ensure the CPP remains sustainable for future generations. That's why each year we publish an annual report of our financial performance, and in it, other important information which you can find on our corporate website. And every 2 years, we hold public meetings across Canada to answer questions from Canadians. Over the past 24 months, the board has continued its ongoing commitment to continually enhancing our governance. This has included approving the next phase of the organization's long-term strategic direction, a renewed focus on conduct and culture, and further strengthening of our risk management practices. Last year, the board approved a new integrated risk framework for the organization, and this year, the board created a standing risk committee that oversees this area. Our approach looks at all risks holistically, from those that stem from investment decisions to those posed by financial markets. We also keep an ongoing watch over emerging threats, such as climate change, cybersecurity, and geopolitical risks. Our ongoing crisis preparedness has positioned us to respond quickly to the COVID-19 pandemic. Through 2020, the board has worked closely with management to ensure the fund is well positioned to manage through the significant financial and operational impacts of the COVID-19 pandemic. Acknowledging these unprecedented circumstances, my fellow directors and I are confident that management is taking every appropriate step to weather these exceptional challenges to best of ability. We continue to have strong conviction in the organization's planning for the long term. Our highly constructive and collaborative relationship with management enables us to work together on the evolution of our strategy. Management understands their role in executing the strategy, and the board's role remains focused on oversight and guidance. Our 2025 business strategy, approved 2 years ago, is designed to keep us well positioned to mitigate future financial disruptions and to capitalize on new growth opportunities in the years ahead. We strive to remain a leader in realizing global governance best practices for our industry, and we actively promote strong governance practices not only in CPP Investments, but in all of the companies in which we invest. In doing so, we continue to represent the very best interests of you, our contributors and beneficiaries across Canada. On behalf of the Board of Directors and management, we are united in our commitment to the highest standards of corporate governance, and we're proud to be recognized internationally as a leader in pension plan management. I'm very pleased to report that your CPP fund is in strong, capable hands under the leadership of our CEO, Mark Machin. I would now like to turn it over to Mark to share a few words with you.
Thank you, Heather. We're living in extraordinary times. The global pandemic continues to impact people, communities, and economies. It's altered our lives and how we live. And while this is not the first disease to spread around the world, this pandemic is casting a long shadow. Health officials and governments are learning many things about COVID-19, with better treatments, testing, and the global race to develop and produce a viable vaccine well underway. Yet, there's much more we need to know. It's this uncertainty and the start-stop of reopenings that's adversely impacting confidence in global economies. And Canada is not immune. Our economists at CPP Investments project the world economy will contract by 3.4% this year, a stark reversal from the 2.8% growth anticipated at the beginning of the year. Yet we're now starting to see improvements in many parts of the world where the economies are emerging from lockdowns and are now turning back to growth. In Canada, as businesses and retail have started to reopen, recovery has begun. However, it will likely be slow and extend well into 2021. All of you across Canada, from coast to coast to coast, have been deeply impacted. But there's one thing you don't need to worry about, and that's the financial security of the CPP fund. We invest the CPP fund to weather all types of storms. And while a global pandemic of this magnitude is rare, the likelihood of a big event affecting financial markets is more frequent. We not only anticipate, we prepare for moments like this. Over the past decade, we've enhanced our risk management practices and properly prepared a financial crisis plan, business continuity practices, and even a pandemic response plan. So when the pandemic hit, we quickly moved from 9 offices globally to more than 1,800 home offices, continuing to invest the CPP fund with the same skill, professionalism, and good judgment to help protect your retirement security. The strength of our long-term investing approach is a well-diversified portfolio that helps to ensure the fund is resilient. We invest across the globe in a wide range of industries and asset classes to ensure the investments are diversified and not dependent on just one area. And this minimizes the risk to the fund and helps us to earn the best possible returns over the long term. Right now, the global pandemic is actually accelerating growth in healthcare, technology, data infrastructure, and renewable energy, and that's where we're making investments, amongst many other diverse sectors. We're also looking closely at emerging opportunities created by the new habits likely to shape our post-COVID world. Opportunities such as the rise of e-commerce and online grocery, the adoption of telehealth, the increase in remote work, the creation of new complex supply chains, and the shift in population away from urban centers. We expect some of these to be long-lasting and will create significant investment opportunities for the future. Over the next 12 to 18 months, we expect the global economy will bounce back, albeit slowly. But whatever happens, you can continue to trust the CPP will be there for you for many years to come. Here's a short report on our performance.
At CPP Investments, we never lose sight of our long-term objectives in our daily work. Maximize investment returns for the CPP fund and minimize risk to help provide financial security for generations of Canadians. The fund grew to $434.4 billion as of June 30th, 2020, a $33.8 billion increase over the past 12 months. Our active management strategy and the strength of the diversified investment portfolio we've built over the years allowed us to weather the storm as the world faced extreme challenges this year. We can't always predict the future, yet we do plan for it. Our sophisticated investors take a disciplined long-term approach to diversify the fund across geographies and asset classes, maximizing our returns over a long horizon against a wide range of possible events. That's why the true test of our performance is our long-term results. In the last 10 years, we earned 10.7% net nominal return, or $259.8 billion in net income after all costs. Investing today with an eye to the future, we're building a portfolio designed to grow and generate returns over time. This year, we continue to make significant investments in innovative healthcare and advanced technologies, infrastructure, autonomous vehicles, and renewable energy, all critical in the years to come. Now, as we look ahead to a period of uncertainty, we will stay on course with our long-term investing strategy, prudently manage our capital, and closely manage our existing portfolio of investments. We'll continue to stress test our portfolio as we always do, looking at optimal diversification and strong investment returns under a variety of future scenarios. This way, we can be confident that the fund will continue to deliver decades of steady performance. It's why the latest report from the Chief Actuary of Canada confirmed that the fund remains sustainable for at least 75 years. While our daily lives may have changed, the sustainability of the CPP fund has not. Our sound long-term strategy is essential now more than ever. We'll continue to invest and grow the fund for millions and millions of Canadians as a critical part of their financial security today and for many years ahead. At CPP Investments, we believe sustainable investing is simply smart long-term investing. We have a clear goal to maximize return without undue risk of loss. Effectively managing environmental, social, and governance factors creates sustainable value over the long term.
10 years ago, we set up a group to look at environmental, social, and governance risks. And that group has grown from 2 people to 15 people today that look at investments across the organization to assess these risks.
We recently updated our policy on sustainable investments to more clearly articulate the business case for doing this and our expectations of corporates with respect to how they integrate ESG considerations into their strategy and operations.
When it comes to actively engaging with companies, we focus on 5 key areas. Water, one of the world's most critical resources. Human rights, because companies that don't respect human rights face potential operational turmoil, higher legal risks, lack of community support, and damage to their reputation. Executive compensation. We see clear evidence of long-term shareholder value when there is alignment between executive pay and company performance. Board effectiveness. Having a diverse board in place to guide strategy and oversee risks is critical to achieving superior financial performance. we have a global board gender voting practice to take a stand for increased representation of women on corporate boards around the world. In 2020, CPP Investments voted against the election of directors at 323 international companies for not having any women on their boards. And finally, climate change, one of the most significant global challenges of our time.
Climate change is one of the big issues of our generation, and as long-term investors, we need to think about both the risks and opportunities that climate change present. Climate change creates investment opportunities as well. For example, in renewable energy, where we've made investments in wind energy, in solar energy, and another one would be electric vehicle charging stations. We think that's going to be an important piece of infrastructure in the future where there are more and more electric vehicles on the road.
Over the last year, all major transactions have incorporated climate change due diligence. We've reviewed over 100 transactions worth more than $100 billion. We aim to deliver the investment teams and their investment committees clear line of sight of both the climate risks and opportunities associated with the investment, but also approaches to managing those risks or capturing those opportunities where we proceed with the investment.
One thing that we're really excited about is something that's happening here in Canada, which is an investment that we've made into carbon capture technology that we think could be really important in the future.
Meeting the needs of almost 8 billion people on the planet today is already creating tipping points with respect to water stress, pollution, income inequality, and many more factors. Consumers' expectations are quickly changing in response to this, and the number of companies that have failed to realize this and destroyed considerable shareholder value continues to grow. To be a successful investor in this new century, we have to be able to identify the companies proactively managing this reality, but also those failing to capture the risks and opportunities of this new century.
In some ways, the pandemic has pulled forward the future in terms of change. So now we have an opportunity to invest in things like climate change, where we can put our money to work in things that will help us have a more prosperous, sustainable, and healthy environment.
I don't think that many of us have really thought long term about how we're going to save up for retirement. And when we do think about it, it's usually that retirement is a long way out.
Young people are concerned about buying their first home and settling into their careers. Retirement isn't on their radar. Many people don't have access to company pension plans that may have been available for previous generations. And on top of that, many people are struggling to save for retirement. Having the enhancements to the CPP is critically important to their financial security in retirement.
The increased benefits are really important for Canadians in the long term. It's going to provide a stronger and more stable income for today's generation and for future beneficiaries.
I want all young Canadians to know that the CPP will be there for them when they retire. It's a foundation for their retirement that they can count on.
A lot of our investments globally are very long-term. We really make the best investments through our intensive research deep dives into specific industries or sectors. I think it's great that we have a separate organization that actually manages the money on behalf of Canadians, that's sustainable for the long term, and it'll be there for people when they retire.
Whether you're starting in your career or you're nearing retirement, it's important to the social fabric of our country. I get to see firsthand the bright, talented minds that work at CPP Investments. It's inspiring to see how many people are dedicating their lives to growing the fund and working towards a very important public purpose.
At CPP Investments, we design a portfolio to help ensure the CPP is strong, resilient, and sustainable for the long term. Our team of professional investors invests around the world in public and private assets like stocks, bonds, real estate, and infrastructure. Together, this delivers a well-balanced, globally diversified portfolio that will help achieve higher returns over a very long horizon and materially above what can be achieved through a low-cost passive investment strategy.
In designing a portfolio, the first step is looking at the risk. What is the appropriate risk target? Because we have to take some amount of risk in order to earn returns. We consider market losses or short-term volatility, reputational risk, and the ability to sustain a long-term strategy.
We have to balance short-term risk with longer-term returns. If we took an insufficient amount of risk, we would not be able to sustain the plan in the longer term. But on the other hand, if we took too much risk, there'd be more volatility in the near term and downside risk for beneficiaries and recipients. So we try to balance those two things together to get the best outcomes for contributors and beneficiaries in the near term and in the long term.
The total portfolio approach means that we look beyond the asset class labels and try to identify what are the risk-return factors that drive returns for different investments.
Principally, these are economic drivers, things like GDP growth, the business cycle, interest rates, inflation, the way in which those broad economic factors affect asset returns. And we try to design a portfolio that's quite balanced across all those various economic factors. The reason for that is that they often behave in quite different ways. So by having a balanced set of exposures, we get a more resilient portfolio that's better diversified and more able to deliver on our mandate.
Diversification is the most powerful way to mitigate market downturns and enhance investment returns. It helps to build a resilient portfolio.
And the way diversification works is effectively it means that you are investing in assets, in sectors, in companies that don't move together all at the same time. One asset may be doing well and another asset is not doing so well, and there's kind of a natural offset or a bit of insurance or hedge that comes from diversification. You could think of it as essentially meaning that we're not putting all our eggs in one basket. We're putting our eggs in a lot of different baskets. If a given country is doing poorly and you can't be sure in advance whether that will happen, you've also invested in another country that's doing well. The same thing would be true with particular companies. And this enables us to have a more resilient portfolio.
To determine how resilient our portfolio is, we perform stress tests to see how it will react under various scenarios. And then, COVID hit.
Market crisis due to COVID-19 in March was unprecedented. However, in a crisis like that, you just really discover whether the diversification is working, and the diversification in our portfolio worked as intended. So our losses in the portfolio were limited because they're offset by the outperformance or the gains from government bonds and the depreciation of the Canadian dollar. And it worked exactly as we expected.
We manage the fund in a way that's responsible, disciplined, and consistent with our mandate so that there's sustained value added over the long term. CPP Investments also has in place robust valuation processes to measure the fair values of our investments on an ongoing basis. With a well-balanced and globally diversified portfolio, Canadians can trust that the CPP will be there for you today and for generations to come.
On behalf of the more than 1,800 CPP investment professionals around the world and our board of directors, thank you for taking the time to be with us today. We hope we've given you a better understanding of what we do and of our commitment to you, the more than 20 million CPP contributors and beneficiaries. We would now like to move to the question and answer session of our meeting.
Hello, and welcome to all CPP contributors and beneficiaries in the territories. As Heather just mentioned, we're now moving to this final segment of the public meeting, the question and answer period. Before kicking it off, I would like to note that we are currently meeting virtually throughout all of Nunavut, Yukon, and the Northwest Territories, and would therefore like to acknowledge the lands and traditional territories of the Indigenous peoples of Nunavut, Yukon, and Northwest Territories. My name is Tara Perkins. I'm CPPIB's Managing Director of External Affairs, and we're very happy to host these meetings to provide you, the CPP contributors and beneficiaries, with the opportunity to ask questions about our organization and the role that it plays in helping ensure the fund's sustainability. I'll be moderating the session today, and I'm here with Edwin Cass, our Senior Managing Director and Chief Investment Officer, who's going to be answering your questions.
Thank you very much, Tara. Before we begin, on behalf of the organization, let me extend our appreciation to everyone joining us today. We were hoping to conduct these meetings physically in the territories, and unfortunately COVID prevented that. But hopefully 2 years' time, we can revisit that, and I'm very much looking forward to having the opportunity to visit in person. As Tara mentioned, I'm Ed Cass, Chief Investment Officer at CPP Investments. That means that I'm responsible for overall portfolio construction, including the allocation of capital across the 26 internal programs that we run. I'm very excited today to take on some important questions and provide you with key insights into the activities of CPP Investments.
Great. And we very much do encourage your questions. If you have one, please submit it by clicking on the blue question tab that you'll find at the bottom left-hand side of your screen where it says Ask there. Thank you to those of you who've submitted questions in advance or already during the broadcast. We want to ensure we have enough time for live questions, and we hope to get to all of them, but if we can't, then we will keep your question on file and review it, and in keeping with our protocols, we'll aim to get back to you in a timely manner by email. So Ed, let's kick it off with a question that we've received. It says, the Canadian territories are warming more rapidly than the rest of the country. How is CPP Investments incorporating climate change into its investment decision making?
Thank you very much, Tara, for that question. Climate change is one of the questions that I think have been asked most through this series of public meetings because it touches the lives and the livelihoods of almost everyone in Canada these days. Unfortunately, the territories are obviously no exception there. Climate change is a global phenomenon, and it's impacting our investment activities globally. I'd like to start in the response to this question by outlining some of the ways we look at climate change. And when we think about climate change, we think about its impact in two particular dimensions. One is what we call transition risk. That's the risk in the behavior of the investments from regulatory outcomes, legal changes, technology changes, even different market perceptions of investment holdings throughout the lifetime of the asset. The second is the one that most people are more familiar with, which is just physical damage. Obviously, as climates become more volatile, as temperatures increase globally, there's the increased chance of physical damage to investments that we hold, whether it's infrastructure investments, property, or other physical chattels. So within those two dimensions, we've tried to attack, again, this problem through another two perspectives. One is a top-down perspective. That's how does it impact our portfolio as a whole? So if you take the aggregate of all of our investments, how could climate change the performance of our portfolio over time? And to answer that question, we've assembled a team of people internally that have looked at the most probable ways that climate change will affect our environment over the next 20 or 30 years and what that pathway looks like. And then most importantly, trying to tie those different scenarios to actual investment outcomes. I think we're at the forefront there. We've partnered with leading academics who are looking at the problem. We've also taken a lot of technological input and advice from people who have studied the problem from a kind of big data perspective to inform those views. But we think we're well on the way towards establishing what we think the impact of our portfolio would be under kind of bookend scenarios to that climate evolution. The other way we look at the effects of climate change is from a bottom-up perspective. So we look at all of our big investments, and we've reviewed most of the major investments within our portfolio at this point in time to take a look on an individual basis as to how climate change might affect them. So a lot of those assets that we hold will be negatively impacted through climate change. Some of those assets will be positively impacted, but we've gone down and we've taken an in-depth look at the actual investment level to see the possible implications for each one of these. And we think by combining these two different perspectives that we'll get a good grip on the possible implications for our portfolio and the long-term sustainability than what we can do to kind of enhance the sustainability of that portfolio if we find that it's challenged.
Great. So our next question is, how is CPP Investments accountable to the territories?
Thank you very much for that question as well. CPP contributors and beneficiaries come from all across Canada, and in the territories I think there's roughly 88,000 people that are contributors to beneficiaries, and as we're accountable to all contributors and beneficiaries, we're also accountable to the territories. I would say that at a high level, when you take a look at our activities as a fund over the last few years, we've become much more proactive in trying to champion the cause of the CPP and make people appreciate what a great institution we've built nationally, and most importantly, just how safe your investment savings are and how sustainable the fund is. So we've been reaching out to local people across the provinces. And recently this year, Mark Machin, our CEO, actually visited Whitehorse to talk to local leaders there, business leaders, Indigenous leaders, student leaders, as well as politicians, to explain to them what we're doing as an investment fund and how that's important to the activities that they carry on in the region. We were also hoping to participate in the Arctic Indigenous Investment Conference that was to be held in Nunavut this year. Unfortunately, that was scheduled to be held in June, but had to be canceled because of COVID. But we're looking at engaging in that next year, hopefully, if they just roll that forward. And we're also looking at proactively going out to the territories that we haven't visited yet to champion that same cause that we were championing in Whitehorse. So the short answer is we're definitely accountable, and we're taking a proactive stance towards trying to make sure that the people in the territories feel engaged with our mission.
Great. And I mentioned that we had some questions we received in advance. Some of them were by way of video, and this one is addressed to our CEO, Mark Machin. So let's take a look at that now.
Good day from Whitehorse, Yukon. My name is Albert Drapeau, Executive Director for the Yukon First Nation Chamber of Commerce. Our question is, since we met in February 2020, countries across the globe, including Canada, have been affected by the COVID-19 pandemic. As Canada responded to the pandemic with relief programs, the national debt has increased. Do these rising government debt levels affect CPP investments, and if so, how will the organization respond? Thank you.
It's a great question, and as I mentioned, we were able to put this to our CEO, Mark Machin, so here's his response.
Thank you for your question, and it seems an age since I was in Yukon, but it was actually only a few months ago. It's a really important question because rising government debt around the world is an important issue and will weigh on economies. I'd like to start, though, by noting importantly that we at CPP Investments operate at complete arm's length from federal and provincial governments, and all the assets we manage are strictly segregated from government funds. We receive funds from pension contributions. We don't receive them from government revenue. So really this means our perspective is one of an investor in government bonds rather than any other perspective. Now, in our most recent annual report, we noted that we held about $40 billion of debt issued by federal and provincial governments and Canadian government-owned corporations. In terms of our investment strategies, we're not compelled to hold government debt or any other asset. But fixed income, these bonds do play a fundamental role in how we manage investment risk appetite for both the base CPP and the additional CPP, so overall in the portfolio. And in fact, the reference portfolios that serve as benchmarks for these two parts of the fund have significant fixed income holdings. And many other pension funds also hold bonds. And what they can do is limit the downside for the portfolio when stock markets fall. And it's worth noting that Canada was in reasonably good fiscal shape amongst the G7 nations coming into this crisis. And rating agencies like S&P reaffirmed Canada's AAA rating in July. Canadian government bonds also performed quite strongly during the recent stock market downturn earlier this calendar year and did provide a strong source of diversification and dampened the impact on the portfolio.
Great. And just before I go to our next question, I'll just remind the viewers that you can ask a question at the blue button, bottom left-hand side of your screen where it says ask. If you just click there, you can send one straight through to us. So our next question, Ed, is do you have any investments in the territories?
Yes, we're invested in a number of companies that have operations in the territories, primarily in the mining, forestry, financial services, and tourism sectors. Maybe I'll take this opportunity just to explain a bit about our investment activities and our investment framework. One of the interesting things about our investment portfolio, and a question that we've been asked in past meetings, is just why are you so diversified outside of Canada? And by way of background, we hold around 15% or $65 billion of our investment portfolio is invested in Canada, with, of course, the bulk of that, 85% invested outside of Canada. And the reason we do that is to try and gain a measure of diversification. And the way I like to explain that is the fund is primarily loaded on Canada. It's very heavily exposed to Canada, in that when Canada is doing well economically, the fund tends to be in great shape. So the two big drivers of economics are and the economic background within the country and the demographic change within the country. So when those things are doing well, the fund does well, the fund is very safe. Unfortunately, the converse is also true. So when we experience very bad economic outcomes in Canada, the fund is riskier, the fund is less sustainable. So to balance that equation out, we really go outside of Canada and say, how can we diversify our portfolio to make it more resilient? And by diversification, I mean, we don't want all our assets to be behaving in the same way at the same point in time. So if some of our assets are doing well, it's great. It's not great, but it's an offset in the portfolio if other assets are doing poorly. Conversely, if some of our assets are doing poorly, it is great if other assets are doing well. And that's what I mean by diversification. The best way to get diversification in investments is to get exposure to economies other than your predominant ones. So for us, that's going outside of Canada and getting exposure to investments, partially in the US, but also in Europe, in Asia, other geographies that aren't as finely correlated with Canadian markets. So that's why we do that. That means that we have a less of a preference for assets within Canada, but that doesn't stop us from investing in Canada. We always look at every investment opportunity based upon the risks and the rewards that it presents. And if we find great opportunities in Canada, whether it's in the territories, whether it's in Ontario, whether it's in BC, we're going to pursue those and add those to our portfolio.
So why don't we go next to another video question that we received, and this one will be for you, Ed.
I'm Ron Russo, President of the Yukon Federation of Labour, coming to you from the traditional territory of the Carcross-Tagish First Nation. Here in the North, we believe in employment equity. In the North, there's a very high Indigenous population. Will the Canada Pension Plan invest in Indigenous businesses and Indigenous hiring? Thank you.
Thank you very much, Ron, for that question. Great question. The first part of the question dealing with investing in Indigenous businesses, we look at the possible investment in Indigenous businesses just like any other possible investment. So we examine the risks around the investment, the rewards, and certainly if we find something that is attractive to us and fits with our investment strategy, we will invest in it, absolutely. The second question, the second part of your question relating to employment equity is one that I personally feel very passionate about, and I'd like to take a second to explain why. I think as an investor, when you take a look at investment opportunities, it's absolutely incumbent to consider all the different ways that investment could evolve over time. And to do that, you have to bring different perspectives and different viewpoints to bear. And perhaps the best way to do that is through a diverse workforce. You want people with different backgrounds, whether it's different education, different ethnicity, different gender, different sexual orientation, to be taking a look at the same problems and offering their inputs and insights as to the different ways that investment could unfold. So we're absolutely committed as an organization to improving our investment process, and one of the best ways we can improve our investment process is to make sure that we have a diverse workforce. I've personally become involved just in the last couple of weeks with our effort to get a higher percentage of Indigenous people within our workforce. Some of the ways we're thinking about addressing that problem are, one, to work with others externally that are experts in the field. So we've recently partnered with a group called Indigenous Link, which is an online portal which specializes in contacting Indigenous people and placing them in vocations. We're also considering, I'd say, less traditional ways, and one of the ways we're thinking may help us in addressing this issue is to work with universities who are specifically targeting Indigenous populations in terms of their recruitment for their populations. If we can work with them to help them attract great Indigenous students, train those students over time, and then provide those students an off-ramp into the workforce, then I think that would be a potentially very effective way to increase the participation of Indigenous people in workforce. So something we are very focused on, something, as I said, I am personally very passionate about, and thank you for asking that question and giving me an opportunity to draw that out.
So our next question is it harder to invest globally when no one is traveling?
Yeah, yes, is the really short answer to that. You know, it's an interesting question for me. I assumed my most recent role here at CPP Investments just in September of this year. Prior to that point in time, I was head of our real assets business, and our real assets business is one of the most global businesses that we run internally. We have real assets department people on the ground in each one of our 9 global offices. And I must admit, sometimes the travel schedule just drove me crazy trying to visit all the different people in all their different offices and look at all the different investment opportunities. And certainly when COVID hit, a lot of our traditional means of examining those opportunities was threatened. It was a lot harder for us to travel. There was absolute travel prohibitions in a lot of places. And a lot of the normal diligence that we'd undertake before we engaged in an investment were challenged as well. It was that much harder to go and visit a building that we were going to buy, or a business, meet with management of a business that we were considering acquiring. So we had to adapt a lot of our practices. I would say the one thing that's been really beneficial to us, though, when we've gone through that process of changing our investment protocols, is the fact that we do have people on the ground in 9 different offices globally. It made it a lot easier for us knowing that we had people on the ground in Mumbai if we're going to look at an investment in India, or we had people on the ground in Sao Paulo if we were looking at an investment in Brazil, or even in Hong Kong where we had some access to China mainland for a while, or the opportunities in the Southeast region. So we found that our ability to leverage off those people and to leverage off as well the local partnerships that we've been able to build over the last, I guess it's 12 years now since we opened our first offices, our first global offices in London and Hong Kong, were just absolutely indispensable in helping us navigate that territory. So yes, it was harder, but I think we kind of figured our way around it, and we're getting more used to it now. I think the world is having to try and figure out solutions to these problems. But as I said, some of the things that we'd put in place prior to COVID hitting really enabled us to help navigate that in an efficient way.
Okay. So our next question is, why do you issue green bonds?
That's another question that kind of pulls me back to my days in real assets. We started issuing our first real green bonds, I think I guess it was probably 2018. And one of the things that gave the impetus for us participating in the Green Bond program was just the year earlier in 2017, we'd started up a new program internally called the Power and Renewables Group to look at specifically opportunities in the renewable space, whether that's solar power or wind or even hydroelectric power. And we'd been challenged up to that point in time in terms of accessing those investments. I think when we started the program, we only had around $600 million invested in renewable energy. If you fast forward between 2017 and now, we've put almost $6.5 billion into the sector. So it's been, I think, a tremendous success story. Along the way, though, as we started acquiring renewables investments, we looked at the opportunities to finance them, and one of the markets that had opened up was the green bond market. And for those of you that aren't familiar with the green bond market, that's the issuance of fixed income securities that are in essence backed by renewable investments. So when you issue a green bond for $100, you have to show that you've invested at least $100 in green technology, whether that's renewable investments or something similar like LEED certified buildings in the real estate space. So we decided to participate in that program, and it's been a real educational eye-opener for us. I was part of the marketing effort for that program. We ended up going around the globe talking to investors that were specifically thinking about investing in the sustainable space. So You have some funds right now that are dedicated to nothing but sustainable investing, and we were able to interact with those people, listen to their concerns, listen to what they thought the opportunities were in the space, what some of the risks were in the space. That allowed us to really leverage up our internal programs to attack some of these opportunities that those people were able to educate us on. So I think it's been a tremendous success, not only in our ability to raise additional funds, but also increasing our capacity to learn from those that are really vested and really enthusiastic about that space.
Great. So our next question is whether governments can use CPP funds for political purposes and what protections are in place, they ask.
Yes, absolutely not is the answer. And the reason for that really harkens all the way back to some of the considerations that were put in place at the time that our organization was put in place back in 1997. So we have what I think is globally recognized as a kind of best-in-class governance framework, in that the monies of the CPP fund were designed to be segregated from government revenues. Now, I know that a lot of you probably collected paychecks in which you've looked at the line items on your pay stub, starting from gross pay down to income tax, and you'll see that line item for CPP, and you realize that the federal government collects the money for the CPP, but their involvement ends after that collection and turning over the monies to us. So it's not as if the federal government collects those monies, throws them into their consolidated revenue fund, then pays us a check if they have extra money left over at the end of the day. Those monies are collected, and the excess monies in excess for the benefits that have to be paid out of the fund are turned over to us and placed in a segregated account beyond government interference. So that was far-sighted by the people that designed the plan in terms of protecting the plan, and hopefully it should give you a lot of confidence that governments can't, quote, kind of swoop in and destroy the pension savings that you're looking to rely upon as you enter into retirement. It's been a system that, as I said, I think is best in class from a governance perspective, and it's one that's received a lot of accolades from international institutions like the OECD for being really thoughtful and being really farsighted in terms of pension design.
Okay. So we have someone asking how we're invested, why we're invested in companies like Lockheed Martin and Boeing that are involved in the weapons and war space.
When we look at our mandate, we consider the foremost element of our mandate to earn the highest risk-adjusted returns that we can. And we think the best way that we can do that is by trying broadening our investment opportunities to have the greatest investment universe of opportunities that we can possibly have to assess. And for that reason, we specifically, consciously have made the decision not to eliminate whole sectors or whole industries from our available investment universe. That's not to say that we're ignorant of some of the considerations, or we don't take into considerations ESG factors, environmental, social, or good governance factors when we make our investment decisions. We absolutely do. But we place them in the context of what is the risk from those ESG factors upon our investment, how are we being compensated for them. If we're adequately compensated, we will choose to invest, again, to try and get the best possible outcome for the fund, to ensure the best possible sustainability of the fund over the long term. But there are instances in which the risks outweigh the benefits, and we choose not to invest in industries or particular companies that are challenged, or we don't agree with the ESG mandate or remit of the management team. So we don't put them in blanket prohibitions. We do examine those risk factors, but we try and put them in that context of the overall investment decision-making process, as opposed to putting blanket prohibitions upon investment.
Okay. I'm looking at the clock. We're probably down to our final 2 questions or so. The next one is, why is this your first meeting with contributors and beneficiaries in the territories? Do you have to do them here? And do you have plans to increase awareness of CPP investments in the North?
Yeah, so I'll start with the last and kind of work my way back. So absolutely, we plan to try and increase awareness of the CPP fund itself and the activities of CPP Investments in the North. As I explained in one of the previous questions, we think it's absolutely essential to people, for people to understand our purpose and what we're doing to try to aid them in terms of long-term retirement security, and we're proactively reaching out to people everywhere to aid in that. Why have we not done it before in the territories? I think it harkens back to specific statutory provisions that said that every 2 years we had to reach out to each one of the provinces and hold local public meetings to explain our purpose and to be accountable to the public. And we kind of met that statutory objective, but we didn't look beyond it. And now we're proactively looking beyond it and saying, you know, where else do we have stakeholders? And we have over 88,000, I believe, stakeholders in the territories between contributors and beneficiaries, and we absolutely want to make them part of that process. So this is our first public meeting, as you say, with people from the territories. Hopefully it's not our last. And as I said at the beginning, I would love to personally be able to continue to be involved with it, and I'm very much looking forward to having the opportunity to visit you on the ground physically in 2 years' time. Let's hope we can achieve that.
Mm-hmm. So I think this is probably our final question, and it's, do you think that part of your fiduciary duty to contributors and beneficiaries includes helping Canada transition to a low-carbon economy?
Thank you for that question, and again, it's one that absolutely everybody is vested in the outcome of, because climate change is one of those big existential threats to everyone globally now, and it's certainly one of those risk factors that we consider to be the most prominent in terms of our portfolio. I wouldn't say it's a fiduciary obligation of ours. We've tried to draw a distinction between public policy debates and investing activities. We think things like response to climate change are in essence an element of public policy debate and better left to politicians, but we're very vested in that outcome. We're very vested in that outcome not only because of that threat to retirement safety, but also the threat to our existing portfolio and how it affects the evolution of the CPP fund itself going forward. If we end up in a world where there is extreme physical damage, if we end up in a world where there is intense transitional effects upon our portfolio holdings, that's not good for anyone. It's not good for us, it's not good for our portfolio, it's not good for long-term sustainability of people's retirement savings. So we do actively seek opportunities that align with that outcome and try and bring about solutions to these problems within our investment mandate that hopefully we kill two birds with one stone. We find amazing investment opportunities and we help to solve some of these big existential threats that we as a global community face.
Great. So I think that's all the time we have for questions today. Thank you so much for doing this, Ed.
Well, thank you very much for your questions, and thank you for everyone that's participated. I would like to say that if there is something that we didn't get to, or if you do have a question that you didn't have the opportunity to raise at this point in time, please shoot them off to us. We're going to endeavor to answer everything that we can by email directly with you, and we hopefully can answer your concerns there if we haven't addressed them in the meeting today. We appreciate your participation, though, and engagement today, and hope that it helped you become more familiar with CPP Investments and the fund's sustainability over the long term. There is going to be a pop-up section at the bottom of your screen, either right now or shortly. It's a little survey on how well we did today. We'd always like to hear your comments as to suggestions for improvement. We'd like to improve the product going forward. The only way we can do that is with your input. So if you could take the time to fill that out for us, that'd be awesome. Lastly, on behalf of our board, our senior management team, and especially over 1,800 employees, thank you again for your participation today. Stay well and stay safe.